Welcome. So what I'd like to show you is my version of a FTSE 100 volatility clock. A lot of people don't realise and forget that you can actually trade the FTSE 100 24 hours a day, Monday to Friday. Most people assume that the FTSE is open between 8 a.m. and 4:30 p.m. But that's actually the time that the stock exchange is open. So let's just have a look a little bit further on what I mean by the volatility clock. So this is my interpretation of a volatility clock. I've divided it up into 48 segments, 30 minutes each. And what I mean by volatility is basically when the price action is at its highest. You can see here the high to low range, red being high, blue being low, just like hot and cold. And what you can see here, if you treat this like a 24-hour period on a clock, okay, what you can see, and this is basically the FTSE 100, the 24-hour period. Now, as we know, the FTSE opens at 8 o'clock and shuts at 4:30 for the stock exchange. Now, the most volatile time, typically on any normal day, would be around 8 o'clock, 8:30, 9. Around that sort of time when the stock exchange opens, you get a lot of price action movement, and that's when your RSI indicators and the other types of chart setups that you have are going to work the most. Volatility goes hand in hand with price action. And what happens after the morning's panic, volatile market starts to dwindle down a little bit. And what you find sort of after 10 o'clock mid morning, things start to cool off, and it gets a little bit calm. 12 o'clock, news comes out in the afternoon on the markets. How's everything doing? So you get a little bit of put more price action here. Then it calms down. Now, this is the most important thing that people forget about what happens with the FTSE 100. It moves algorithmically and in conjunction with other markets, specifically Wall Street. Now, Wall Street opens at 9:30 USA time. It's actually 2:30 in the afternoon here. So when the Yanks open at 2:30, you'll see the FTSE move in conjunction with it. If you have Wall Street open and the S&P and the FTSE at the same time, you'll see both of them moving in exactly the same direction on a typical day. So what I'm trying to show you here is the other stock markets in the world that really do affect the FTSE 100. So if we look here, you've got the American, US markets, Wall Street, Dow Jones, S&P, open hour time, 2:30 in the afternoon, and that's when you're going to get relatively high volatility and price action movements. Then it calms down, and of course, basically, when the stock exchange comes to a close, 4:30, things start to heat up again, and the day traders that made their profits in the day, they want to close out their trade. So if they were going short, then there's going to be a rise in the market to cash in those profits. If they were going long, there's going to be a fall in the market for them to also cash in their profits. Now, also though, like I was saying, FTSE 100 24-hour market. So what you're going to have is it's going to continue to move algorithmically with the Dow Jones and S&P 500, the American market. Just because the stock exchange shuts at 4:30 doesn't mean that the FTSE 100 isn't going to move. It is. It's not going to be as volatile, but it's going to move. It's going to move with exactly what the American market's doing. The American market goes up, the FTSE is going to be pulled up with it. If it goes down, the FTSE is going to be pulled down with it. Only when the US market shut at 9 o'clock in the evening our time do things become quiet in the FTSE 100. And you can see here this blue scale here goes quiet. However, 1 o'clock, 2:30, Asia wakes up. Japan, the Shanghai, China, they open. Not so much of a movement, but if something does happen that's catastrophic, you will see the FTSE move. The FTSE will move with whatever these are doing. And what you basically see, just before the 8 o'clock open, around 6 o'clock time in the morning, data starts to come in from how Asia did overnight. And if Asia's negative for that day, you're going to find that the FTSE will respond to that. And you could go to sleep, thinking that you've had a great day on the market. You've had a trade open, and okay, I'll leave it running overnight. Next thing you know, America's gone haywire, that's pulled the market down. Asia has responded to what America has done, and that's pulled the market down even further. You wake up in the morning, 7 o'clock, thinking that your trade's doing great. Next thing you see is the market is 50 points down to the close of what it was at 4:30. So this is just something that you just need to remember in the back of your mind. You know, the FTSE 100 is a 24-hour market, and it is affected by the other markets in the world. Typically, Asia and the Yanks, basically. You know, and it is the Americans' casino, and we're just along for the ride. They dictate what's going on in the world globally. It used to be the FTSE, but I strongly believe now that the Dow Jones and S&P directly influence the FTSE 100. So it's just something to keep in the back of your mind on a 24-hour period with your FTSE 100 day trading. Most volatility is at 8 in the morning, 8 till 10. Then you're going to get some profit takers happening after 10 o'clock with whatever happened in the morning, first sort of 2 hours, couple of hours. Just remember, whatever direction happens in the first couple of hours, you're going to get, if it's downside, you're going to get a little bit of upside for the profit takers at 10 o'clock. Goes quiet in the afternoon, then it all kicks off again later on, post 2:30 to the close. Also something to be aware of is the spread. So that's also in conjunction with volatility. You see, outside of market hours, you know, you've got a spread of 4, which is around this period here. You know, you're not really going to see a lot of price action happen unless something catastrophic takes place with the other markets. So that's my version of the volatility clock, and it's just something that I keep in the back of my mind. You know, so here's a good example. I've just taken a segment where I was talking about 8 o'clock in the morning. You know, here's a snapshot from IG, just on a 10-minute chart. It's just a quick example here. You can see here on the volatility clock, as I was saying, 8 o'clock is the most volatility. Well, here you go. Here's a great example here. 8 o'clock. You know, before that, everything's running tickety-boo, nice and quiet, nice and quiet. 8 o'clock, bang, huge candlestick, huge downside, huge downside. You can see here on the RSI. Everyone knows that I do RSI trades. Had an RSI of 16, 17. That's a fantastic opportunity to go long. And in fact, here the Fib S2 level for that day was 69.29, and we actually reached that. So I would have normally gone long in this area here. As everybody knows, I trade off the fibs and supports and resistances. So this would have been an opportunity for me to go long. I've got my RSI alerts and indicators go off. It's hit one of my levels that I trade off, Fib S2. I would have gone long, tried to go for my 20 points, 10 points, banked, cash gone in. You know, so this is just what I'm just trying to basically say. You know, here's a great example. You know, if we have a look at IG here, this is what I was talking about. Let's go across and have a look at some other times. Example, I think the 25th of that day was a great example. Let's just pull this chart over a little bit. Okay, so on the 25th here, a little bit slow. Just bear with me. There we go. Right, so you can see here, let's just set this chart up a little bit. Right, so on the 25th, where's 8 o'clock here? Right, okay, so 8 o'clock here, you can see that just before 8 o'clock, just before, you can see that RSI kicked off, and then on the open after 8 o'clock, look at this volatility here. Look, my RSI indicator would have been screaming here. Okay, so here's the 8 o'clock price action where it's high. You can see that as a representative on the RSI chart. Go along, not so much happening, and then look, 2 o'clock, 2:30, US market opens. Look what the US market did. Pumped it right up. RSI would have been screaming here. This is typical what the US does. This is called a pump and dump. They pump the market up, pump, knocked out all the short takers, waited, bang, dropped it. So this here, look, so this is what I'm trying to say. 8 o'clock here, lots of volatility. 2:30, Americans come online, lots of volatility. So just something to think about in the back of your mind as for you day traders. So hope you enjoyed my volatility clock, and just something to remember in the back of your mind.